Good afternoon, everyone. Welcome to the Daily Market Update Show. And this is where I break down QQQ, SPY, as well as the current perspective of the bull or the bear side of things and what I'll be looking at going forward, as well as support and resistance. And let's get into it. So, right now we are looking at QQQ, and I am looking at this rising wedge. This is tail looking line as resistance, and this will be support. This rising wedge will be a visual guide. It won't be something where I, like short right at the resistance as a play. So you can see one touch, two touch, three touch, four touch here today. And we have support as well. So rising wedge psychology essentially is making higher highs without follow through. So every time we make a new high and there's just no more follow through from the bears, sorry, bulls. And then we made a new high today, and we'll see if the bulls can actually hold this time, or it won't be more follow through again like the last time it happened back here. So the thing is that QQQ is remaining the strongest, but SPY is still very weak. So essentially, that is why I think this rising wedge is going to be continued to play out into maybe later this week. And due to the sectors are still rotating around, so we aren't seeing. It was actually looking pretty bad for the bulls this morning. And if you go to the, just gonna go to the 5-minute time frame. So when we were down here, it was essentially a gap up open from CPI data. We have 4.9% this morning versus the estimate of 5%. So we were slightly cooler, and that's what the bulls want to see. And we hit our teal looking line here. You can see the top of the resistance, and then we just dropped like a rock. And that was not what the bulls want to see at all. But this end of the day move pretty much saved it. And now we are watching to see if tomorrow it will continue or not. And tomorrow morning we have a PPI data, which is also a inflation data as well, but that one is a little bit less volatile than the core. We have CPI today, unless it comes like way off, like to either sides. But usually it doesn't, due to if CPI comes in pretty close to line, then PPI is usually pretty close to the estimate as well. So I don't think we're getting any surprises. The one that would move the market a lot more would be the jobs data, right here, the initial jobless claim. So the estimate is for 245K, and you can see here it's a 3-star. The more stars it has, the more volatile that event is, and it comes out exactly the same time as the PPI. So, which is good, so we don't have to wait for two datas. That's 8:30 EST. So I'll be up for that. And yeah, even though the end of the day bull move saved QQ, it was due to Google. I think it's AI event, and you can see we actually broke above this top resistance right here. 1, 2, 3, 4, and yesterday we actually rejected from it perfectly from it again. Talking about this resistance and this support down here over the weekend, and now we have broken above it due to its AI event, and Google's pretty much brought the whole market up from that event. And I was talking a little bit about Nvidia as well, and Nvidia popped on that as well. And we are still in that rising wedge for Nvidia, even though it popped end of the day. So we'll have to see. I'm gonna go to SPY first before I break down Nvidia. So if you are a bull in the market right now, you can just say, I'm super comfortable. QQQ is out pretty much at all-time highs, 8-month highs, roughly, and I have nothing to worry about. Essentially, that is true, because if you are a QQQ bull, you have absolutely no worries at all, and things are looking pretty good for you. And if we break out of this wedge, I'm looking at 330. But if you're a bear, you can say, well, if you look at SPY, it's been going nowhere. We haven't even gone over this structure, which is from February. If you look at QQQ, that structure is down here. That structure is this structure where we are well above it. Yeah, 5.5%, 6% above it. While SPY is still struggling with this structure, which is not a very good look for the bulls, the SPY bulls. And we had a nice gap up open, which confirmed the daily uptrend. But now we came back to it with zero follow through. So you can say SPY is not looking well at all. Because when you have a daily uptrend with zero follow through, there's a very good chance it can reverse. But it also, a little bit saved end of the day. This wick, you can also say it's a reversal wick, but there wasn't really any notable drops at that moment. And you can say tomorrow we can potentially go back up, which is likely if we do get continuation of QQQ. But at the same time, QQQ is already close to its upper range. So we'll see if it can actually break this resistance or not. If it breaks, then SPY is going to go back to test its prior resistance zone. So it's interesting to see if SPY actually goes into this zone. It will also be QQQ's resistance zone at the same time. So they're going to be likely hitting resistance zones together. And you can say this can potentially look like a daily head and shoulders, which is a bearish pattern. If it breaks down below here, then it's a confirmed head and shoulders. We need more price action on that before we confirm the pattern. So if you are a bear, you can continue to look for financial sector being weak, and you want to see, does the financial sector, which is in SPY, ends up joining Team Bull with QQQ, and both of them starts going higher or not, or vice versa, where QQQ ends up joining Team Bear, and then if QQQ joins Team Bear, SPY is definitely rolling over, because the only reason SPY is actually holding up here is because of QQQ and tech stocks. So if QQQ decides to take a break, like QQQ decides to, okay, I'm going to take a break and consolidate back down here, SPY is going to go all the way back down here for this area. And that will be a bear break of this rising wedge, as well as a confirmed head and shoulders bear break, as well as, and this will also be a bear break out of the rising wedge as well. So right now we're at the spot where it's like you just don't know until it happens. So you just got to be careful. We're kind of like at the end of the pattern, and it can go either way. So how you play this? You can play this based on if we get a bull break, then you can add and just set your stop loss below the prior lows. And then if it's a fake out where we break out and then come back into it, you get stopped out, and just with a small loss. Versus, you just get chopped around here. You don't even know which way it's going. Essentially, this is what happened over here. You just get chopped up and down. Nobody knows which direction it's going, and you just have to trade intraday scalps in this kind of situations where you just get in out intraday, and then the next day go by day, and essentially that's I'm playing the semiconductor sector, which is a lot more volatile, a lot more gains to be made intraday, and still waiting for SPY and QQQ to finally give us a clear direction, so you can when we get a clear direction, I'll let you guys know. And then we can potentially play something like like a short-term swing trade, we hold something for at least a week or something. Like say we get a nice bear break, market rolls over, we go into a bearish position for a week, it rolls over, it bounces, and then continues, then there would be a lot more gains than something like cluster of nothing. One day you're up, next day you're down, one day you're up again, next day you're down. Right? So this depends on your trading style. I do both. I play both sides, bear and bull. And my point of view is I am midterm bearish and long-term bullish. That's essentially what I am currently in. And let's take a look at the semiconductor sector. So I've been playing this guy for a while. You can see every day it has very decent moves. I'm playing the 3x leverage ETF. So if it's up 2%, thing is up 6%. And if we're down 3%, we're at, and it also goes up 9%. So you can play both ways for the leverage 3x ETF. And the semiconductor is a lot weaker than QQQ. You can see we cannot get over this quadruple top. And so essentially you can get in a bearish position up here on this top and then just super small risk for your stop over it, just slightly above it. And if it goes over, you get stop a little bit. If we do end up rolling over, then you have a chance of hit this one and this one. So the risk reward is really good. And or we get break above it and then it comes back, retest here, bounce off of here, you go into the long position at 3x, and then we continue to ride it back up. And then you set your stop loss below that long position with the small risk as well. So it is SMH is a very clear, very clear support or resistance zone right here that you can play off of, versus like QQQ and SPY, just very choppy and very hard to see where it's going. Obviously, if QQ continues to go up, then it will drag the semiconductor sector up. So watching QQQ is key if you're playing this sector as well, because semis is a tech sector as well. And let's take a look at Nvidia. So Nvidia has still, it was actually a lot weaker in the morning. You can see the relative weakness we had. We didn't make new highs and then we dropped over. And then Googled the event was talking about Nvidia as well a little bit, and then it popped with it. So essentially, Google today saved the market, and we'll see how Nvidia trades into its end of its pattern. It's getting pretty darn tight into its rising wedge. Essentially, rising wedge is that psychology I've been talking to you for you guys, where it's makes a higher high, and then there's no more buyers, because it's just the shorts and getting squeezed, so they have to cover the positions, and then it just fades away, makes new highs, no more buyers again. It just kind of fades away. That's the psychology of the rising wedge, and so we'll see. Ends up fading out, and then and then we'll have to see which way it breaks earnings. It's actually gets the end of the pattern is super close to its earnings, but it doesn't have to play. Earnings on the 24th, but it doesn't have to play out before. The pattern doesn't have to play till the end of the pattern. So I'm trying to say. So yeah. So if QQQ ends up rejecting from its rising wedge here, then Nvidia will likely pull back as well. But see if Google pulls back. If Google continues to be really strong, it might help Nvidia a little bit, being a little bit stronger due to its name drop today. But everybody knows Nvidia is an AI already since like down here, So we'll see if that bump continues, and I will see you guys tomorrow. And if you guys got any questions, feel free to let me know. If you got any other mega cap tickers that you want to look at, like Apple, or I usually do that on the weekends. I go through all the big tech stocks. So you can watch the last weekend's video where I went through Apple, Amazon, Google, Microsoft, and Nvidia, Tesla as well. You can check those out and let me know if you guys got any questions. And if you made it this far, feel free to subscribe, and I will see you guys tomorrow. Hopefully the data comes in decent if you're a bull, and if you're a bear, hopefully the data comes in as well. And good luck on your guys' trade. Have a great rest of your days. See you guys around.